This week we learned that the much heralded and hyped Basel III rules will have exemptions for banks clearing gold trades in London. The Wall Street Silver Reddit movement also got a full mainstream financial media article covering some of its users. The Russian Sovereign Wealth Fund has completely cut holdings of fiat Federal Reserve notes, opting instead to go long gold bullion. And other Eastern nations and mints have returned to the physical bullion market. Hello, this is James Anderson on behalf of SDBullion.com. Before we go further in this week's SD Bullion market update, please do me the favor of smashing the like button below so other like-minded bullion savers might see this content. If you like silver and gold bullion related updates, subscribe to our channel. We regularly publish compact, data-rich videos to keep our subscribers informed on the major precious metals markets. The silver spot price closed slightly lower for the week at just over 26 fiat Fed notes per troy ounce spot. The spot gold price edged higher to end the week at just over 1,800 fiat Federal Reserve notes per troy ounce spot. The gold-silver ratio climbed to end this week at 69. We begin with breaking news this Friday that banks clearing gold trades in London will be able to apply for exemptions to tighter capital rules, which are supposedly due by January 2022. The Reuters article points out that London's derivative precious metals trading hub settles mostly derivative gold transactions worth around $30 billion a day. In annual gold supply market, we have about 4,000 metric tons that come to market, and that implies derivative leverage of around 47 times the amount of new gold mined and recycled per day versus what settles in London alone. Since the London Bullion Market Association's coming into the gold market in 1987, the divergence between the Eastern and Western compounding gold price discovery has widened tremendously. Outside of Western trading hours, the Eastern gold price is now aggregated to over 22,600 per troy ounce through this full fiat currency era. For those of you who might recall last April 2020 when London and the COMEX conspired to begin a new 400-ounce gold futures contract so they could effectively nearly quadruple the supposedly underlying gold inventory numbers. Well, the combination tell here is that today, a year and a few months later, no one is trading that new COMEX 4GC contract. And the various additional bullion bar hallmarks, which were simultaneously rushed into COMEX good delivery bar acceptance, coming from supposedly dubious places like China, Russia, and Turkey. It all signifies a physical bullion shortage brewing underneath the London and COMEX gold derivatives market's window dressing. For a bit of precious metals price discovery gallows humor, here is one person's impression of the USA's Commodities and Futures Trade Commission and their ongoing investigations of silver and gold price manipulations. The Russian Federation made news this week by declaring that their nation's sovereign wealth fund has cut its fiat Federal Reserve note reserves to zero, while simultaneously declaring that the fund will be buying $4 billion in gold bullion moving forward. Throughout the first 20 years of the 21st century, the Russian central bank built her official gold bullion reserves diligently. And now that nation's sovereign wealth fund is stating that it too will begin acquiring gold bullion in large volumes. And while of late, Indian gold bullion importation has slowed, updated data points to the world's largest gold bullion buyer being back after having bought the gold price dip in March 2021 at a clip not seen since the major gold price dip of 2013. On the silver importation side of the Indian equation, the nation is yet to return to its average 2010s clip of importing 170 million ounces of silver bullion per year. It'll be interesting to see what happens to the physical silver bullion market once they do. The most often bought retail bullion product is back at the US Mint, and updated June 2021 sales figures for the Type 2 American Silver and Gold Eagle bullion coins have sold well to begin their bullion market debuts. Yesterday, financial Twitter was shaken by a story reporting that Wells Fargo is now cutting all personal lines of credit, which typically allow users to borrow up to $100,000 on their home's equity. Many are seeing this as a harbinger of bad things coming to financial markets soon. And now to finish off this week's SD Bullion market update, let's have a look at the coverage that Reuters gave the growing Reddit Wall Street silver movement today. This article, by the way, is also written by Peter Hobson, who I've personally engaged directly with over the last year plus, offering him insights on the dual motivations shared between derivative trading commercial banks and central banks in their ongoing price suppression schemes. The former mainly being greed-driven, while the latter being a seemingly endless drive for more consolidated control over our financial lives collectively. Article headline reads, "Can Reddit's Silver Apes beat the market?" London, July 9th. The seventh paragraph contains language that may offend some readers. Kerry Cracker, 56, has worked in kitchens all his life. Since March, he's spent around $100 a week, half his spare cash on silver coins. He's part of a growing social media movement who say they are buying bars and coins for protection from a coming age of inflation. Thanks to a community of like-minded silver stackers gathering on social media platform Reddit Inc., Seattle-based Cracker says he also feels empowered. They're so encouraging and so convinced in the changes they can cause, Cracker, who lost his home in the financial crisis, told Reuters. Inspired by Reddit from Wall Street Bets, some of the 122,000-strong community hope to corner the market and bring down what they say is an unjust banking system. Market professionals say that it's unlikely to succeed. There's plenty of silver, and central banks in the United States and Europe expect inflation to stay in low single digits. But bankers aren't getting through to this group. There's a bit of anger, like, F the system. If there's a back door to wealth, I may take that back door because the front door is closed, said Craker. The bankers and others have basically shut the door for everyone who is not themselves. The core of the movement is a Reddit community called Wall Street Silver, formed in January at the time Wall Street Bets was marshaling an uprising of ordinary people against the financial elites through coordinated buying of company shares. Reuters spoke to more than 20 members who call themselves Silverbacks and Apes, have a homepage featuring an image of an army of primates on the march from the Planet of Apes movie, and say things like, "Ape-like shiny." They organize raids, days on which everyone buys together. The group's founder, Ivan Boyuki, is a 24-year-old former car salesman living with his parents in Alberta, Canada. "Now is the time to wake up and take the power back in the hands of the people," says one of his characteristic posts. Silver costs around $26 an ounce. Stackers think the price will rise as inflation erodes the value of currencies. Demand for silver rises and supplies run short. Some say that buying bars and coins, they can jack up prices by 100% or even 1,000%, to the point where they can call the shots against the so-called bullion banks, the large financial institutions which lead trade in precious metals. A March post pictured silver coins laid out to spell a message to the head of J.P. Morgan Chase & Co., a U.S. investment bank which dominates the bullion trade. "Kiss my rear end, Jamie Dimon." J.P. Morgan declined to comment. "In a year or two, we will have millions of people in the movement," Boyuki told Reuters, "and then it'll be over for the bullion banks." Quote, "corner the market," unquote. Prices of silver and gold, which are traditionally seen as safe stores of wealth, have risen since 2019. Gold is up about 40% and silver around 70% since then. The silver stackers are joining millions worldwide who believe currencies are vulnerable, a fear that has grown as governments borrowed and printed money in the pandemic. "It scares me every day when this bomb will burst," said Tim Hack, a 23-year-old stacker in Germany. "Silver and gold really have intrinsic physical value that you can even feel when you hold it in your hand." Posters on Reddit joined the silver fray on January 27th, when posts appeared on Wall Street Bets saying that if enough people bought the metal, they could push prices to the moon. "Corner the market," said one. Adding to the impetus was an argument put forward on Reddit that big banks trade huge quantities of paper contracts for silver that they don't have in their possession, keeping prices lower than they should be. In some ways, that's correct. Contracts representing around 800 million ounces of silver are active in the New York futures market alone, more than twice the amount of exchange says is in its registered vaults, not all of which is available for delivery. Much of the silver that banks buy and sell in London, another big trading hub, is borrowed, bankers and traders say. If every professional who owns silver on paper called in their dues at once, there wouldn't be enough metal on hand, they agree. The system works because most people with contracts don't want actual metal, which they'd have to pay to store and insure. They are speculators or miners and jewelers hedging their risks. After the post on Wall Street Bets, around $3 billion rushed into a fund run by asset managers BlackRock that stores silver for investors. BlackRock said it added more than 100 million, quote, "adds dropped word, unquote, ounces of silver to its stockpile in 3 days. Silver's wholesale price jumped nearly 20%. Much of the silver stored for BlackRock is in London. The London Bullion Market Association, LBMA, an industry body, later said that there had been, quote, "concerns that London would run out of silver," unquote. BlackRock told Reuters it did not track where the money had come from. The Reddit group's founder, Bullion, said he watched with growing excitement, turned to his father and said, "Why don't I start a Wall Street silver community?" Quote, "Family forever," unquote. There's also truth in Redditors' claims that big players can influence the silver market. One trader tactic is spoofing, sending out fake buy or sell orders to shift prices before completing the real trade. In 2020, JP Morgan paid $920 million to U.S. authorities to settle charges that his staff sent hundreds of thousands of fake orders into precious metals and treasury markets. The bank said at the time the people responsible had left and it had improved its compliance systems. It declined further comment for the story. But the impact of spoofing lasts only seconds or minutes, said Ross Norman, a London-based former precious metals trader. The January squeeze lasted 3 days. The Wall Street bets returned its focus to stock markets. Silver calmed. Since early February, the price of silver has fallen by $1. Undeterred, Wall Street Silver issues a deluge of tips, analysis, memes, photos, and encouragement. It is only Reddit's 3,783rd biggest community, but it's frequently in the top 20 for volume of posts per day. When a new member posts, Bullion often responds saying, quote, "You are now family forever," unquote. Hell of a time. Reddit buyers sit at the end of a fat silver pipeline. Only about a quarter of the 1 billion ounces or so that are produced each year is used to manufacture the bars and coins that most of them are buying, analysts say. Most of the rest is used for jewelry and industrial applications. Michael Mezarek, who runs the world's largest gold and silver refiner, Volcambi SA in Switzerland, says the 1,000-ounce bars of silver used in wholesale market are plentiful. For small investors who think they can corner the market is, quote, "entirely wrong," unquote. They can engineer a squeeze on products, he said, but silver in total, they'll have a hell of a time. Investors will stockpile a lot of silver this year, but less than in 2020, according to consultants Metals Focus. Demand in the West is strong, but in India, one of the biggest silver-consuming countries, the pandemic is reducing people's ability to buy, they say. Funds like BlackRock's stockpiled 331 million ounces, the most ever. In 2020, Metals Focus said in a report for Silver Institute, bar and coin buyers took home some 200 million ounces more. This year, the consultancy expects funds to hoard 150 million ounces, the second highest level ever, and bar and coin buyers 253 million ounces. Silver coins and bars can certainly hold their value. Higher inflation should lift prices, as will rising demand for makers of goods like electronics and solar panels, said Royanna O'Connell, an analyst at traders and brokers StoneX. But she and others at companies that trade the metal think predictions of 1,000 an ounce are out of this world. Of 39 analysts and traders polled by Reuters in April, only 7 thought silver prices would average 30 or more in 2022. The highest average they forecasted was 44 an ounce. Redditors are unmoved. Cracker, the restaurant worker, has begun reading obsessively about inflation, money supply, and other economic data. Quote, "There is a monster around the corner," he said. "I'm trying to sharpen my stick." Now, if I sat here and argued all the half-truths of this piece, we'd be here all day. In short, this article failed to mention that much of the supposed underlying COMEX silver and gold fractional reserves are merely double-counted, unsecured silver and gold ETF holdings. A point that I made earlier in this week's update. Never mind that the fiat US dollar monetary base has nearly doubled since the September 2019 repo loan fiasco began. The article also failed to mention billionaire trader Paul Tudor Jones's warnings about what might happen to commodities if investment allocations return to their 2011 levels. He asked on CNBC, quote, "What happens if the Reddit crowd ever gets into commodities," unquote, wondering, quote, "God forbid," unquote, what happens when the bullies on Wall Street begin going long on commodities like they did in the 1970s? Commodities like silver bullion have a thinning finite supply. And judging by the data alone, this burgeoning silver bullion bull market is already way larger and widespread than the scapegoated supposed Hunt Brothers silver squeeze, halted in January 1980 by COMEX silver liquidation orders only rule change. Perhaps silver squeeze meme maker Creflo Silver illustrates it best. What may be coming to the silver market sooner than many may think is possible. That's all for this week. As always, to you out there watching, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.